These three altcoins are on the rise, a new crypto bill is coming, and Coinbase is working on a new payment method. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. On-chain data shows that Bitcoin is facing the prospect of a big bull move as stablecoin buying power returns. On-chain analytics platform CryptoQuant now shows stablecoin supply metrics repeating historic bull market patterns. Bitcoin is in peak accumulation mode according to CryptoQuant's stablecoins ratio metric, and the results have always been positive for Bitcoin price action. As noted by on-chain analyst Cole Gardner, when denominated in USD, the stablecoin ratio for the exchange Bitfinex recently hit its high since late 2022. This came at a time when markets had sold off significantly after the FTX meltdown, paving the way for a resurgence that took the Bitcoin price 70% higher in Q1 alone. The Bitfinex Bitcoin to stables ratio blows up in advance of every big bull move, a major leading indicator. A key United States House panel has approved a pair of bills that could finally deliver some regulatory clarity to crypto firms, including clarifying the differences in jurisdictions between the U.S. securities and commodities regulators. On July 26, the majority of U.S. lawmakers voted in favor of the Financial Innovation and Technology for the 21st Century Act, as well as the Blockchain Regulatory Certainty Act. The House Financial Services Committee approved the Financial Innovation and Technology for the 21st Century Act in a 35-15 vote, which would establish rules for crypto firms on when to register with either the Commodities Futures Trading Commission or the Securities and Exchange Commission. The Republican bill also outlines a process for firms to certify with the SEC that their projects are adequately decentralized, allowing them to register digital assets as digital commodities with the CFTC.
Developers are using blockchain technologies as a building blocks to create the next generation of decentralized internet technology, also known as Web3, which will give individual users more ownership over their data, transactions, and finances. For more than a century, America has been the global leader in technology innovation, invention, and adoption. The ideas turned into innovative technology by American ingenuity have been central to human progress, and digital assets are no different. As other jurisdictions like the UK, the EU, Singapore, and Australia have moved forward with clear regulatory frameworks for digital assets, the United States is at risk of falling behind. We intend to change that today. This committee is taking that first step to fix that problem. I remind my colleagues that joint stock companies were once an innovation that some claimed were only used to facilitate fraud. It took decades to figure out how to properly regulate these, which were predecessors of the modern-day LLCs and equity stock ownership forms that we have. Just as joint stock companies were revolutionized how companies are owned, digital assets and their underlying blockchain technology hold the same promise to revolutionize ownership in the digital economy. Our comprehensive digital asset market structure bill recognizes a key issue. Digital assets that are not inherently securities may be offered as a part of an investment contract, but that does not make them necessarily securities. To clarify how the Supreme Court's Howey test applies to digital assets, our bill focuses on two key issues: decentralization and functionality. That is the crux of the Fit for the 21st Century Act, the pairing of those two factors.
Optimism, a leading Layer 2 scaling solution, has announced the release of the Law of Chains. This initiative aims to define the minimum viable product, or MVP, of a superchain, which is a unified collective of chains dedicated to open, decentralized block space. In this context, a superchain refers to a Layer 2 network where OP chains are individual chains managed by the Optimism collective. All OP chains, regardless of specific attributes, are considered part of the superchain, sharing security, communication layers, and open source technology stacks. According to the Optimism team, currently new OP stack chains operate independently, lacking a straightforward way to share standards and improvements. This leads to challenges for users and builders who must individually access various chains based on security, quality, and neutrality. As per the protocol, the Law of Chains is a significant step towards creating a unified collective of chains committed to open and decentralized block space. It aims to solve problems once and for all, ensuring that improvements benefit everyone and prevent users from feeling overwhelmed by multiple choices. Thus, with this new update, Optimism governance moves from governing a single chain to governing a standard shared by many chains, which defines the properties that must be part of the superchain and prioritizes user protection during its traverse and transaction. Optimism is set to unlock $36 million worth of tokens on Sunday, with the anticipated increase in supply spurring a 3.5% slump in the price of the blockchain's native OP token token on Tuesday. The previous token unlock on June 30th resulted in a 10.5% sell-off across all OP trading pairs, although the token rebounded by more than 15% over the following 24 hours. This time, the unlock equates to 3.56% of Optimism circulating supply, with $19 million being allocated to core contributors and $17 million to investors. In spite of the short-term volatility, the Optimism token has marked a 67% gain since the turn of the year, following integrations with Coinbase's Base protocol, using Optimism's OP stack for development purposes. Optimism is currently trading at $1.50 with a market cap of just over $1 billion. The circulating supply remains at just 16% as the token unlocks are scheduled incrementally until August 2027. Coinbase CEO Brian Armstrong urges the crypto community to work together on making crypto payments instant and free globally. Bitcoin maximalists, including Block co-founder Jack Dorsey, MicroStrategy executive chairman Michael Saylor, and others replied asking Coinbase to integrate the Bitcoin Lightning Network on the exchange. After recent efforts for clear crypto regulation, Brian Armstrong on July 27th said the next step for crypto is making crypto payments instant and free globally. The community needs to speed up getting layer 2 integration, better on-ramps, and simplify crypto onboarding to aim for making payments under 1 cent and settling under 1 second. He hints at using USDC for transactions. The Solana co-founder Anatoly argues that USDC on Solana is cheaper than Bitcoin Lightning Network, with the average confirmation time of just 1.3 seconds. Solana, XRP, and Stellar-based crypto investment products have seen a rise in assets under management and a spike in activity. On a monthly basis, XLM products surged by 62.7% to $17.3 million. The rise came on the back of a pump registered by Grayscale's XLM. Sentiment surrounding XLM has been positive over the past month, bolstered by the advancement of its partnership with USDC Circle and strategic collaborations with entities such as MoneyGram. XRP and Solana products recorded a 33.2% and a 55.7% increase in assets under management. These figures currently stand at $65.7 million and $87.8 million respectively. Over the past few weeks, a flurry of ETF-related developments have taken place. Specifically, asset managers from around the world, right from the US to Europe and Australia, filled out applications and launched their products. Company-wise, Grayscale was the biggest beneficiary. The aggregate value of all its products surpassed $25 billion, helping the company maintain its position as the dominant player. The improved stats bring to light that users continue to hunt for new avenues to provide them exposure to crypto. The Bank of Italy's innovative hub picked a decentralized finance project involving Ethereum scaling solution Polygon and crypto infrastructure provider Fireblocks to help financial institutions dabble with DeFi and tokenized assets. The Milano Hub, which is the Italian central bank's center for developing innovative ideas in finance, will support the development of so-called institutional DeFi for security token ecosystems for 6 months. The platform aims to help traditional financial institutions to experiment with security tokens and executing transactions using DeFi rails in a safe, regulated manner. The innovation comes as central banks globally work on central bank digital currencies and explore ways to incorporate blockchain technology into the existing payment system. Meanwhile, tokenization has become one of the hottest trends in crypto, as TradFi institutions and digital asset firms are placing old-school instruments, including bonds and equities, onto the blockchain. A Bank of America report said that tokenization may reshape how value is transferred, settled, and stored across every industry, making transactions faster, lowering costs, and creating a more efficient financial infrastructure. The project will involve Italian banks, asset managers, and financial institutions, according to the press release, including the country's largest banking group, Intesa Sanpaolo, with more than $1 trillion in total assets under management. Polygon co-founder Sandeep wrote on Twitter saying, "Not sure about crypto Twitter, but it seems like the whole world is building on Polygon. Mainstream Web3 equals Polygon." That's it for your Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.